Steve Feldman, your former firm, Goldman Sachs, called a top in gold. What's your view of that?
Well, it's hard to contradict Goldman Sachs as an alumni, but a lot of analysts have different opinions, but I think they're all agreeing on the same facts. And Jeff Curry, who's the analyst at Goldman, has said that with better employment numbers, with the solution potentially of a fiscal cliff, with economic recovery, strong dollar, that gold prices could stabilize and even go down. Other analysts, the Morgan Stanley analyst specifically, looks at the same fact pattern and says that may not be a positive factor for gold, but the overarching macro still remains in place. Regardless of fiscal austerity in the U.S. and better government, if the fiscal cliff gets together, there's still going to be monetary easing. There's still going to be super low interest rates for the foreseeable future. That's going to be the primary tool that this government is going to use, and that's gold positive.
The Morgan Stanley analyst said also that there's more demand for physical gold. The Indians are buying again. How does this affect you over at GBI?
Well, I'm happy to say that I think the average Indian consumer or the average Indian wedding isn't looking at the fiscal cliff or Ben Bernanke's monetary policy. It's a more cultural shift there, and frankly, one of the things that I think supports the pricing in gold is that if pricing were to go down, and it's been on a 10-year run, then I think there would be more jewelry buying, there'd be more local Indian buying, the middle class would buy more than the super affluent class and investors. And in addition, as that price goes down, I think central banks will buy meaningfully more, and it's always in physical.
One of the big questions we heard a lot this year when it comes to central bank buying is exactly how much the Chinese are buying. They say they're buying one thing, but behind the scenes they might be buying another. Do you have any insight on that?
They don't report how much they buy, and they don't have to. They don't have a particularly transparent system. But we do know that as a percentage of their reserves, it's a meaningfully lower number than Western governments typically reserve. Moreover, we know they have lots of exposure to currencies, specifically the US dollar. And any clever portfolio manager would be advising them to diversify a little bit from US dollar risk. I'm sure the Chinese are still looking for a strong dollar and have that US Treasury that they hold be worth a lot of money. But I think it wouldn't be prudent for them not to diversify away, and gold's perfect since it's also got the cultural bent.